All right, everyone and their uncle has been telling you the market is about to collapse. Tariffs, recession fears, economic uncertainty, you've heard it all. So what actually happened to home prices in Sacramento in March? They went up again. Stay with me because at the end of this video, I'm gonna show you a specific split in what's happening in the market right now that almost nobody is talking about. And if you're a buyer, you're gonna really save some money. Listen up. Let's get into the data. Let's talk about the new home market. For the 8-county region that we track with the North State BIA, the Building Industry Association, BIA members reported 486 new home sales across to the 8-county region in March. That's down about 10% from February's 542, which is pretty normal. A little bit of a reset with a little bit of a slow, but that's also part of this split that I'm going to talk about at the end, so hang out with me. So slower than normal, but it's still a very healthy baseline, a lot of activity in the new home market, a lot more activity in the new home market than we've seen over the last 2 years, so we're heading in the right direction. So what's actually moving the market? Traffic to most new home communities has been flat, but here's what's changed in the beginning of the year. Buyer intent is up sharply. The buyers who spent the last 2 years waiting for perfect conditions, lower rates, lower prices, some kind of signal, right? There's this magic smoke signal that's gonna happen. Those people are finally making decisions. They've done the math and they've concluded that waiting is costing them more than buying. Now, we're also seeing a parallel move on the sell side. Owners who were locked in place, afraid to give up that magic low interest rate, you know who you are starting to put their homes on the market. They're trading up or they're downsizing. That's a healthy sign for the overall market velocity. We're seeing that across both markets. Now, let's talk about the existing home market. This is where some real activity is happening. The average price in the 4-county region for March hit $685,000. That's up 5.9% month over month. The average active listing price climbed to $859,000. That's up 2.6%. Both numbers are moving in the same direction and confirming what we're seeing on the ground. This market has real demand underneath it. Let's talk about price per square foot. That was up 1.8% from February. It's incremental, but it's stacking. You'll see why that matters here in a moment. Now, total sales volume. We sold 1,534 homes in March as a market. That's up 21.2% from February. And pending sales, here's the leading indicator, was 34.4% up over the last month. Now those numbers tell that March and February weren't a fluke, and likely April is going to be just as busy as the rest of the first quarter was. Days on market, here's again, we're seeing more activity. The average days on market dropped to 47 days. That's down 8 days from the prior period. And the sold to original list price ratio, this is where the sold and where the ask and the bid happens, that's up to 98%. So we're only 2 points off of that right now. That means sellers are getting almost what they are asking for in the market. That's not market distress. Remember, your uncle told you we're in market distress. The media told you we're in market distress. None of that points to that, right? This is a market with real competition. Let's talk about months of inventory. We're at down to 2.2 months of inventory. We're knocking on the door of a seller's market. Under 3 months is where pricing power shifts back to sellers. We're there. Mortgage rates. Here's where the change happened this last month, right? We've got an external conflict. We have an international conflict that caused rates to spike. We're up into the mid-6 range from the low 6 range that we were at the beginning of the year. That's economic uncertainty that's caused by this conflict. That is temporary, but the market tends to overreact and then it comes back down. So we're gonna see this quick jump up, which we saw, but it's gonna be a slow reset back down. So we're gonna hang out in this range for most of the year. The other issue that's gonna keep rates up for this year, or keep them in this mid-6 range, is we have really strong job numbers. And plus we've got sticky inflation. Those two things give the Fed zero incentive to lower rates. So we're gonna hang out here for a while. Here's the numbers that you need to hear. 6.5% is not an emergency. It's historically a normal mortgage rate. You can always refinance your rate. You cannot reset the price that you paid for your home. Now, every month you wait, your home The home you're planning to buy gets more expensive. We've seen that over the last 2 years of everybody saying that they're waiting for this magic time. All they lost out on is equity and never saved anything on this magic rate that we're waiting for. That's not a sales pitch, that's just what the data is showing. I talked about it earlier. There's a market split that you guys can take advantage of right now. Let's get into it. The resale market right now is moving ridiculously fast. If you've been trying to bid on a house, you've seen how active it is. It's challenging. There are multiple offers, tight inventory, rising prices. That side of the market is hyper competitive right now. New construction, it's a little different story. Sales are moving at a much more measured pace. Big part of that is something that nobody is talking about publicly right now. And in my opinion, I think a lot of agents are hesitant to bring their buyers into new home communities. I'll spare you the industry politics behind that, but the result is real. There are fewer buyers walking through the doors of new home sales offices than there really should be, especially given how active the resale market is. This creates opportunity for you specifically. Builder incentives on quick move-in homes are real right now. We're no longer discounting price. The incentives are going away from the big stuff that we saw over the last couple of years, but they're still there. You can still take advantage of them. We're offering rate buy downs, financing incentives, upgrades, all sorts of stuff that can meaningfully lower your monthly payment or get you into more home for the same money. We have done that countless times, especially over this first quarter, where people came into our new home communities, found that they were unqualified for the resale house or another new home in the area. One of our agents was able to put together a package from a financing as well as our lower Melrose rates that we have in most of our communities, plus a lot of other incentives to be able to get that buyer more home for the same dollars that they were planning to spend somewhere else. So have these conversations. If you really want to know what's exactly going on and what's available in the communities we represent, as well as all the other builder communities, DM us, send us a message. We are here to help. Bottom line, on March, Sacramento market is healthy. Inventory is tight. Buyers who are acting are being rewarded. The noise about a collapse has not materialized. And the data does not support it, as we just talked about. Guys, our job at Next is simple. We're here to help you get from where you are to where you want to be. Whether that's your first home, your next home, or a brand new build, which is our favorite. Let's figure out what's possible. If this was useful, hit like, subscribe, and the notification bell. We do this every month, so you always have a clear read on what's actually happening in the market. Guys, I'm Christopher Brown with Next Real Estate Group and Next New Homes Group. We will see you next month.